Well, hello, friends. How's it going? Happy Monday to you. And if you're joining me on the replay, happy replay day to you as well. We're live, and I'm excited to welcome you to today's live level up conversation.
Welcome to Level Up with Winnie Sun.
Hello, friends. I'm Winnie Sun, your host, Forbes contributor, CNBC council member, and award winning financial pro, here to keep you on top of relevant trending business news. But most importantly, you are always part of today's discussion. So we'll be monitoring and sharing audience feedback throughout the program. So thanks so much for joining me today. First of all, I want to say, welcome back to the week. And of course, the big topic of the day, and probably I'm going to guess for the rest of this week, has been what's happening to the stock market. Now, you may have noticed I was actually away from all of you last week. I needed to step away last week to attend a family member's funeral and make preparations. So I'm sorry I wasn't here for you, but I am back and we're going to get back to business. A lot of things happening today. It's interesting. Whenever we look at the stock market and how it closed, I always want to make sure that I bring those numbers to you. So, interesting enough, you probably are going to be surprised that I'm actually going to tell you that today was a triple positive day. That's right. After all the craziness that occurred earlier today with the stock market, at the very end, I'm actually serious. You'll be surprised to know that the markets turned positive. In fact, the Dow closed up 99 points. The Nasdaq closed up 86 points, and the S&P closed up 12 points as well. Now, the Dow Jones Industrial Average did gain over 100 points. As you remember earlier today, if you were watching, and I was watching all day today, the Dow was actually closed was down more than 1,000 points earlier today. 1,000, that's huge. The Nasdaq also down tremendously, almost 5%. They were down almost 5% in one day today. Also turned positive. The S&P also came back positive, down more than 10% from its January 3rd record close. So a lot of things happening with the financial markets. If you're looking and you're watching with me right now, you might be thinking you're going to go and check up on your financial statements, maybe your 401k. So just be pre-warned. I'm going to tell you right now, it's probably not going to look as nice as your previous 2021 statements. But let's walk you through this. Let's tell you what's going on, and that way we can kind of maybe hopefully, get you a little more calm, a little less nervous. Now, last week, the technology heavy NASDAQ, this is a sector that we talk about a lot. The NASDAQ, definitely a very, very popular index. Many of you are probably stock investors. Maybe you buy some of the big tech names. NASDAQ dropped 10% from its November 2021 record close. So since the pandemic, since March of 2020, the market's been overall pretty positive. That seemed to change as 2022 sort of came into focus. So the Dow Jones definitely gained a little bit today at close, but certainly we're seeing a lot more volatility. And if you remember what we talk about, volatility is not only on the positive, but also on the negative. And so we're seeing that right now. We're seeing a lot of pullback. We're seeing a lot of uncertainty and some worrisome news coming out on the financial markets. So if you're looking at your financial statements, you might be wondering what to do next. Well, let's tell you what we know so far. So here's what we know, that some of the pressures, there's a lot of pressures pulling back on the financial markets. And these are the things that I would sort of highlight for you to be paying attention to. First off, as you know, we're in the pandemic. We already know that. But the Federal Reserve, the central bank, did make an announcement last year saying that they're going to make some changes to the current financial markets because, as you know, inflation is getting so high. In fact, historically, inflation is around 2 to 3%. We're looking at 6% plus on inflation. Now, some of those goods that you've been buying at the supermarket, maybe things that you normally need, maybe for your kids, for school, could be whatever for your home. A lot of those prices are way more than 6%. So a lot of costs of goods have increased, while a lot of people are looking at their payroll and their paycheck and hasn't increased as much. So you're really looking at your money not lasting quite as much at present levels. So the government realizes this is a big issue and they're trying to make things better for all of us, trying to stabilize interest rates, try to stabilize inflation, of course. So these are some of the things that we need for the market to really sort of come back to more normal terms and to feel a bit more confidence. I think a lot of investors are looking for these sort of things. And that is, first off, a stabilization of interest rates. The 10-year treasury yield had some trouble breaking through the 1.9% last week. Following a dip below 1.8%. Now, that was a little bit of good news for stock investors, but stock pricing levels can be interest rate sensitive. And so this is making it so it's harder to justify bond yields, CD prices, saving account rates. These things are, needing to go a lot higher for things to get a little bit more normal. Plus, we need to deal with inflation. Now, this is a key risk for markets right now. And this is the data that we're really concerned about this month. And of course, this month's data is going to be reporting next month. So we don't think inflation is going to get back into the swing of things and back to normal anytime soon. So we're still looking at more news of easing supply chain bottlenecks. And many of you, depending on what part of the country you're from, you might actually see some supermarket shelves more empty than normal. So those are also concerning things whenever you're looking to invest and feel more normal back into the swing of things. Those are things investors don't like to see. Now, I want to say a quick hello also. Joseline, it's wonderful to see you from Massachusetts. Thank you so much, my friend, for being here. Vicky, it's so great to have you join us from the UK. Always a treat. Robin, it's wonderful to see you here with us all the way from the East Coast. Hello. Fred Brandon, a longtime friend. It's wonderful to see you again. Nice to see you again. And so many of you joining from different platforms. As you know, we're monitoring comments. Always a treat to see and hear from all of you. Now, the other thing that I would say are things that we're watching in terms of the financial markets kind of coming back is needing to get back to work. Now, some of you are saying, Woody, I don't know what you're talking about because I'm already back at work. I get it. I'm back at work too. But believe it or not, there's still millions of Americans who are not yet back to work. And why we know that is because currently there's over 10.5 million open jobs here in the US. Now, that's almost at a near record of job openings of companies needing to hire employees to get things done. Now, to give you a comparison of pre-pandemic levels, we had about 7 million jobs open in December of 2019. So it's pretty reasonable to believe that there will be more variants popping up, and with more pandemic concerns, the question is, how do we prepare and plan to get ahead of this? So how do you plan ahead? How do you make sure that you and your household, you and your family, you and your loved ones are going to be okay going to the future? That's a question I have for you. So for those of you who are watching me live today, definitely let me know, what are some of the things that you're making changes on? Are you looking to stock up on food staples for your household? Are you looking to decrease your budget spending temporarily? What changes are you currently making? I'd love to hear from you. Now, here's some other things that, could help. And that is, the stock market needs to feel more stable and confident with inflation, having that settle down a bit. So we're hoping that with some of the government changes, that will make inflation kind of quiet down a little bit. And as we go from winter over to spring, hopefully inflation could possibly convert the stock market havoc and actually turn it positive. So if we get inflation down to the more reasonable levels, people are feeling more confident, they might then gravitate to investing more, right? Putting aside money for those important for future financial goals. And this could be all potentially very positive for the stock market and financial markets in general. We're also keeping our eyes on a federal meeting this is a Fed meeting that's going to happen this week. The Federal Reserve is going to meet. And we're looking for, let's just say, we don't want any more negative surprises, right? Just no more negative surprises. Tell us what's going to happen. We're looking for consistency, confidence, and of course, some direction on how they're going to mitigate more inflation concerns, how to get people back to work, how to get people comfortable with the current levels of the pandemic that we're at, so we feel comfortable getting back to work, making money, getting our kids back to school, going to do some of the things that we've enjoy doing pre-pandemic. We're hoping that takes place sooner rather than later, as investors are now expecting 4 rate hikes this year. So what does that mean for you? That means, first off, if you haven't refinanced or if you've been like just waiting to purchase a home, this is something you want to pay attention to, because interest rates, any little changes in the interest rate can make a big difference on your mortgage payment. Additionally, if you owe credit card debt, also pay attention to that. And of course, look at things like if you're looking to buy a car, like what the interest rate will be there as well. And if you have a lot of money socked away at the bank, not earning a lot of interest, well, you might be hoping the interest rates go higher because you're looking for a little bit more yield on the money that you earn and that you've earned in the bank. Now, that being said, if inflation doesn't get mitigated, doesn't get brought down some, then even if you have money in the bank and it's earning interest rate, maybe let's say it earns a whopping 2-3%, but inflation is still close to 5%, we're still going to be losing money on that money, not keeping up with inflation. Now, we also want to talk about the stability of oil prices as well. We're hoping for stable prices and lower oil prices. That would be a plus. And there's more. There's the midterm election year, which historically, my friends, does mean that there's more volatility and smaller gains. That's historically the case. Now, the question remains, of course, will the second half of this year look a lot better than the first half of this year in the financial markets? Now, historically, we talked about that it's usually very volatile for the stock market. Now, remember, stock market volatility doesn't necessarily mean that things are all going to go down. Volatility can mean up as well. It just means the swings are going to be larger, right? So if you're going to be investing, you realize there's going to be risk whenever you do invest. You're going to have to plan for that and get in a good headspace to prepare yourself for this. This on top of everything else that we're going through. Now, it's always best to plan ahead. And I would say have a game plan in place, because you want to have this game plan in place before the storm comes, not during or after. So this is the time to plan. The other thing you want to pay attention to, of course, that's putting some weight on the stock market, is a potential conflict in the Ukraine. So that's something that we're paying attention to as well. So a lot of things to be paying attention to, right? Especially when it comes to your money. But when you do take a look at your financial statements this week or this month or even this quarter, be prepared. Know that we're going to expect some volatility. But the good news is that through most of the pandemic, the market's actually done pretty well. I think there was one instance since like December 2019 where the market gave back about 5%, around 5% that day. But overall, we've had a really good financial stock market until this point. So understand, whatever you're investing, there's going to be times when there's going to be corrections, there's going to be pullbacks, and there's going to be opportunities for those of you who maybe have been on the sidelines and have been a little just watching the financial markets take off and thinking, oh, wow, I feel like I'm missing out. I haven't been investing as much for my retirement or for my education or for my kids' education. You fill in the blank there. This might be an opportunity for you to go ahead and add in and sort of dollar cost average, slowly buy in to those long-term financial goals. Now, if you have any questions on how to do that, I strongly recommend making a meeting or a consultation. You can do it virtually nowadays with a financial advisor, financial professional. That would be a really smart move, especially since we're going into tax season, right? So I see Vicky is saying, not a good time, influence the stock market. Then I have lost money before the stock market crash. Bring the robots into work. Vicky, that's an interesting point. I would say it's good. I would like to have a robot maybe do my dishes, maybe clean my house, do the laundry. But it comes to investing, comes to your financial picture and financial planning, I still say let the humans do it. Have a very experienced financial advisor jump in to help you. I think that will be a worthy investment for you. Now, some good news though, right? It can't be all bad news. And I imagine, I'm going to tell you, we're going to have some really good news this week. We're going to have a lot of stuff that I'm going to be sharing with you this week. We have a lot of news coming out. But here's some good news. We got to end today with a plus, and that is, we have been seeing, this is some good news coming out of Krispy Kreme donuts. For some of you have Krispy Kremes around you. I actually just finished a 3-day, believe it or not, 3-day road trip. So I had to go all the way to Texas for a family member's funeral and all the way back. and we stop through many cities and many states, and it seems like Krispy Kreme's is everywhere. But here's the thing: the American Red Cross is looking for blood donations. They're saying levels of blood donations. There's definitely a blood shortage right now. It's been supposedly the worst blood shortage in over a decade. So if you're in a situation where you're able to donate some blood, guess what? Krispy Kreme is going to give you a dozen glazed donuts to those who donate. So all you have to do is make an appointment with the American Red Cross or find somewhere where you can go in and give some blood, help someone out. And with that, you get like a sticker that says, I donated. Then you can go to Krispy Kreme, show them your sticker, and they're going to give you a dozen free donuts. So there you go. So there's a little bit of positive news for you there. Hopefully that was helpful. Those of you who are able to, definitely let me know if you went ahead and made that donations, because I would love to say a big thank you on the air for you to help, for those of you who are able to help others and donate blood to those who are in need. So thank you so much, my friends, for watching and supporting our program. I got so much more to do for work. I got so many more meetings for today. And I'm doing national news later this evening as well. So thank you so much, my friends, for watching, supporting our program. Take a moment to share this show with someone that you care about all over social media. A big special thank you to Vicky for always being such a supporter in that way for us. And as a reminder, you can actually find full episodes of Level Up on NASDAQ, Amazon Fire, Roku, and the CW San Francisco. Tomorrow, we have a very special interview saved for you. I'm excited to introduce our guest to you tomorrow. So definitely join us again tomorrow. I'm excited to see you there. Be well, and I can't wait to see you very soon. Take care now. Bye-bye.